Okay, in this video, we're going to talk about break-even point. And when you're talking about a break-even point in terms of business, you're talking about the point in which you have built and sold enough items to break even so that all your costs are covered. And then past that point, you're either going to start profiting or you're going to start losing money, hopefully profiting. So we're looking for that point in which you have built and sold enough items to cover your cost. Okay, so some terminology here. We have fixed cost, variable cost, and selling price. Those are fairly obvious, and I'll let you read through those definitions. The contribution margin is just the difference between the selling price and the variable cost. So it's going to be the selling price minus the variable cost. And that difference goes to pay off your costs or your fixed costs. Okay, so in the first example, it gives us some information and it asks us to calculate the contribution margin. So we need to take the selling price and minus the variable cost. So in this problem, this company is producing pens, and the pens have a selling price of $2, and they're the variable cost of 80 cents. So I'm just going to subtract, and I'm going to get that my contribution margin is $1.20. In part B, it says Jones Company produced pens. The company has a fixed cost of $60,000. Each pen sells for $2 with a variable cost of 80 cents per pen. So this is basically an extension of what we just did in part A. Now, to find the break-even point, I actually forgot to write that in the problem. We're going to add that in, find the break-even point. To find the break-even point, we take the fixed costs and divide by the contribution margin. Or another way you could write it is the fixed cost over, since the contribution margin is the selling price minus the variable cost. That's another way you can write it. In this case, the fixed cost is the $60,000. And we already figured out what that difference was in part A, so I'm just going to write that down, that it's $1.20 because it's the selling price minus the variable cost. So I'm just going to put that in on my calculator. And I'm going to take 60,000 and I'm going to divide by $1.20, which is going to give me 50,000. Which means my break-even point is 50,000 pens. So after I make and sell 50,000 pens, I would have covered my costs. And then after that point, I'm either going to start making money or start losing money. Hopefully, we're going to be making money. Okay, last example. It says Blue Company produces holiday gift boxes. Given the following, calculate the contribution margin and the break-even point. So we need to find the contribution margin, which is the selling price minus the variable cost, which according to the information given, which would be 20 minus 8, which would be $12. So our contribution margin is $12. Now to find the break-even point, we've got to take 45,000 and divide by the contribution margin, which is $12. So when I take 45,000 and divide by 12, that's going to be 3,750. Now, since they're selling gift boxes, my units are going to be gift boxes. Keep in mind that the break-even point is not going to be an amount of money. It's going to be the number of items that this company has to make and sell in order to break even and cover all their costs. So in this case, this Blue Company that produces holiday gift boxes needs to make and sell 3,750 gift boxes in order to at least break even. And then once they start selling more gift boxes, they're going to either profit or have a loss, hopefully they'll end up with a profit.